All right, let's get back to Intel. Of course, it made its name as the chip giant behind the PC era, but a series of stumbles over the last decade have it looking a little vulnerable. The new CEO, Pat Gelsinger, laid out a new turnaround plan this week that includes big investments in a massive area where Intel has been slipping up recently, and that's manufacturing. So is doubling down on a weak area a good idea? John Ford is here to weigh in. What do you think, John?
Well, Becky, not a good idea. A lot of analysts on Wall Street were hoping Gelsinger was going to do the opposite of this. Look at who's doing well in the chip game these days, and they're not making the chips. ARM designs cores, doesn't make them. NVIDIA, no manufacturing. Qualcomm, AMD, they outsource. The bold move from Intel would have been to reduce the capital-intensive fab focus, not expand it. Now, there are lots of other places where the company can go to get its chips made on better processes than it has available today, and sustaining the fab legacy isn't cheap. For the full year, Intel guided to capital expenses between $19 and $20 billion before we even get into this dream that Intel is going to become some ghost kitchen for the chip world. Now, I get that Gelsinger had to make an impression out of the gate with a bold plan, but going back to what didn't work, not bold.
You may not think so, John, but the street certainly thought so. What are you saying? The $20 billion plan to make chips for other companies is a flop?
Well, Becky, on the other hand, if you're betting against Intel coming back in chip manufacturing, you might as well bet against the future of the U.S. economy. Look, all this talk about fabs being a weak area for Intel is incredibly short-sighted, like saying Steph Curry should stop shooting the three after a rough streak. What makes Intel special, what Intel is the intersection of semiconductor design and manufacturing, both together. And what's changed in this cloud and AI era is that customers aren't going to take off-the-shelf chips from a dominant provider anymore. Pat Gelsinger gets that, and he's taking the core of Intel, design and manufacturing, and betting on that for a new era. That means letting customers order off the menu, customize, and it means building new fabs. There were two choices here. Be incremental and doom Intel to a decade of spin-offs, layoffs, and compromises, death by 1,000 cuts, or bet on the future and on Intel's best talents to light the way. All those other companies that don't make their own chips, that's the point. The future is going to run on chips, and they've got to get them made somewhere. Might as well be with Intel in the U.S.
Yeah, I was going to say in the U.S. being the key point, and that might be the big salvation is the timing on this. The Biden administration is really considering a lot of plans to allow additional tax write-offs for companies that are manufacturing here. So that might make the difference, too.
Well, you know, it's not a small thing. I mean, if you're ever going to have a big capital outlay, might as well have it when interest rates are really low. There's this geopolitical concern. Intel's already got fabs both in the U.S., say, you know, Oregon, Arizona, places like that, also in Germany and in Israel. I mean, these are the very areas where it's possible to expand and where there are a lot of forces that want to see it get done.
Shepard Smith here. Thanks for watching CNBC on YouTube.